What's going on, traders? Hope everybody's having a great weekend. Wanted to come in here and do my weekly video on the futures markets. We'll be going over the E-mini S&P 500 ES futures as well as NQ, the NASDAQ 100 futures markets as well. In addition, we'll be taking a look at some of our other market internals and data points that we help to formulate a game plan for the upcoming week and see what we may want to expect, as well as some day trading levels that I will be watching as well. If this is your first time joining for one of my videos, thank you so much for joining. Don't forget to subscribe and turn on notifications. That way you are updated every time we post new videos about the market. And for all the subscribers that are joining me on the regular, thank you again for coming in and really appreciate the support. So with that being said, let's take a look at the economic calendar for this week. Reminder, Thursday, January 9th, the markets are closed in remembrance for the ex-president Jimmy Carter passing away. And also remember that this video is for educational and entertainment purposes only. In no way should be viewed as financial advice. So let's take a look at the calendar here. A short week ahead once again, but let's see what we have in store here on our Market Watch calendar. And we have a nice Temu ad here. Okay. So the 6th, we've got final services PMI at 9:45, factory orders at 10 o'clock. Tuesday, we've got Barkin speaking before the market opens at 8 o'clock. ISM services at 10 o'clock, as well as job openings there on the 7th. The 8th of January, not too much going on, but at 2 o'clock, we have FOMC minutes from the December meeting. Of course, last FOMC on December caused a major breakdown in the markets, where the Fed came in and said we have the potentiality of slowing down on those cuts. So that should be interesting, just to kind of dive a little bit deeper into those notes. It can cause some market volatility, but as of late has not been quite as drastic. Thursday, as I mentioned, the markets are closed, but we do still have some data coming out at 8:30, initial jobless claims. But really, everybody's going to be looking for Friday, January 10th. We're going to get non-farm payroll, the big estimate there on employment. So that is going to be very important and a potential big market mover right there at 8:30. So that's really going to be the main thing that I'm going to be watching as far as economic data this week. Okay, that's all out of the way. Let's start to take a look at some charts here. We're going to start off with a blank weekly chart, and we're going to start some new charts here for 2025 as well, and see what we can take away from a fresh new blank perspective. All right, so obviously we are still trending upwards, and we have this nice uptrend and a slight pullback here, kind of starting to possibly distribute, as more or less we've moved sideways overall in a balance. We pretty much have equal lows here being put in from the week of the 16th and the week of the 30th that has just passed. Not too much. They're pretty much equal, but you can say they are slightly higher low. The low from the 16th was 58.66. The low from this past week was 58.74. So slightly higher there, and I believe that that is encouraging. However, definitely still have some work to do on the bull side. Weekly, monthly, obviously still in a uptrend overall, right? So, but what I'm really watching here is how long we go sideways for, because I really want to see and discern whether or not this actually turns into some and you'll have to forgive the coughs. I'm still just getting over a little bit of a cold, but we're going to have to see if this really actually ends up turning into some type of a distribution, right? And from that, if we do start to really breach these equal lows, then watch out. We could be coming in for a new cycle in the market, and we could see a bit of a markdown and then maybe a bit of a retracement, and we'll go ahead and run through that Wyckoff schematic. So that is a possibility, but we really won't know anything until overall, right, we see a true breakdown from this balance range that we are currently in. And, it certainly is a tradable range without a doubt. As we were mentioning, the lows down there by the 5860s, 5870s, all the way up to 6160. So definitely, a wider range. Of course, we're looking at a weekly chart here, but we've got some room to work and to trade with. Let's take a quick peek. Actually, we haven't looked at the monthly chart since January. See how we closed the month of December. Kind of an indecision candle right there, right? We tried to push up higher, could not accept, came back down, and we only have one candle in the week here, but as far as it looks, it's starting to kind of look like a bull flag to me, to be honest. We've got our post here, and then our pole, and now potentially moving sideways for a move up higher. Still watching, though, these extreme overbought levels here on the monthly, finally starting to turn a little bit red, so I'm going to be paying attention to that as well. But nothing overly bearish at all here from the monthly or the weekly chart, really. Until something starts to truly develop. We have been watching the overbought signal as well on the weekly, momentum still starting to get a little bit weaker here, but we've seen this happen before with a little bit of a pullback, a little bit of weakness right here back in November, but then we just came back up and got a little bit more strength, moved up higher. Although I will say that a few times when we actually did start to break, there's a little bit more of a dip here. This was back in the summertime that correlated with this drop right here, and also right back in March, and pretty much in that first quarter up into the start of the second quarter of the year into April had given us this move to the downside as well. So we'll be watching that very closely. And back here in February, and this is 3 years ago, we got a similar type of situation as well. So is this setting up for a bumpy first quarter into March? That is very possible. But of course, we're going to follow price action always. All right, so we've kind of looked at where we are here on the chart. This weekly candle, we obviously came down. They tried to match the lows. Really were not able to, and the bulls came in. We had a nice rally on Friday, and the markets here on ES were up about 75 points. We closed about 68 points up, but I think we were over 75 points at a couple of times in the futures, and NQ was closed up over 300 points. So nice snapback there. We had a couple of red days in a row, and it was pretty likely that we would see some type of a move to the upside here, as kind of to be expected after 4 red days in a row, right? Statistically, that you usually don't get 5 or 6 without some type of a counter trend move. All right, so I'm going to bring up the daily chart that we have been working with overall, and I'm going to go into the daily time frame and just take a look at some of these levels that we have been working with. Okay, and you know what I might do? I might still save this and then just create another one under 2025. Okay, so you can see here, this was really, I was talking about this on Thursday in online on Twitter. Couldn't really find that acceptance under the 5880 area, which I had this level right here. Also kind of matching the daily lows from October 23rd, right? Multiple times here, we kind of pushed him, right? We couldn't break down lower. And once I saw us not really even closing here down by this range, we closed up over 5,900, over at 59.15, really gave us that springboard to come up higher here and push up. And I think the bulls did a good job closing the market, or closing the markets, yes, over 59.70. 75, and really I'll be also watching the 59.60, right? If we start to see price come back down, right, we can come back and retest, and that's fine. And that would be, if we see buyers come in and ideally hold the 70s, right? We've got two scenarios here. Come back here, hold the 70s, and come back up into 6,000, then 6,025. Or we get a little bit deeper, come into 59.60, 59.55, and then from there make our move back up into the figure, and as I was mentioning, 6,025 area all the way to 640. Two scenarios, those are the most bullish scenarios, and this would certainly be just putting in a daily higher low in either scenario, and that can just set us up for the springboard to go up and go up higher and potentially test this next area where the bulls are going to need to find acceptance over anywhere from that 60.25 to 6,040 here on ES. But let's go into a blank chart. And I'm going to have to think of whether or not I want to delete that or not, because we have all those levels already kind of marked out. Yeah. You know what? Let's get rid of it. Okay. All right, so that's what we had from the other charts, and I'm going to go ahead and kind of create a new one here for this year. So we've got our lows, and we were talking about this before, right? This was that previous balance, right? Well, that's basically where we came right into, right? The highs of that previous balance range. So let's mark it off here and set us up with a little bit of demand. And really we can come into the highs from the rally back in the summertime in July. Right? So we've got this marked off here. 58.50, 58.95. And then I'm going to just mark off right here. Oh, that balance low. Right, so we're looking right here. This is balance. And right here is balance as well. All right. So I'm also just going to throw in, and this is just in case, we start to head a bit lower. I'll be watching that. So let's also now take the highs here. And you can see too pretty much where we stopped, right? We pretty much stopped right at yesterday's high, and we came a little bit higher, but not much. Pretty much equaled the highs from the 17th, more or less. But I'm going to come in right about here. And I'll bring us to just over the figure. This is what's going to, if we start to see closes, right? Back over here. This is good. And here you can see this is basically that 50, as in the other chart that we had, 59.70, 75. That's what we were watching, as well. So, but what we need to see here is closes here on the daily like this, finding some acceptance, and then, okay, I'll be feeling a little bit better about a potential move up higher once again. But what really needs to happen, right? We have all these lows right here. And this range, right? This was the balance too. And when we were looking at the weekly, and I was talking about that possible distribution. Here we are on the daily chart, of course, but this is what I'm watching out for on the weekly. Now, of course, this was from the Fed, so it doesn't mean we're going to get that type of a move down. But basically, this is a similar type of situation where price is balancing, and then it turns out the distribution breaks down. We get our mark up. Right, comes back, retests that breakdown, and then back down once again, right? And that's pretty much, how Wyckoff works overall. Now we've got our swing high here, lower high here. Is this just a lower high? Or, I mean, we could even still come up, right? Some balance formed here. We could even come up and set in a lower high, even if this isn't it. It could even come into about 6,060. Let's just mark off these lows right here as another area that I want to be cognizant of. Right. Really the same thing. Right here. So just as we balanced here, marked down, retested that break of structure, it can just turn out that we do accept over 6,000 once again, but only make our way up to 6,050, 6,060. Then we mark another higher, lower high here, and then we come back down to really search for a daily lower low. Now, I don't know, obviously, if this is going to break. What could obviously end up happening is we just come back down and then we bounce from there, right? This is another scenario, of course. So we'd have to be watching that. But this could definitely be a potential target here if we start really seeing acceptance in this area, some closes in this area here. Be really looking to target back up into that 60. And then from there, I don't know. It's anyone's guess if we just go ahead and pull back. And even if we pull back here, right, what would we be setting in at that point? Well, we had our swing low or equal lows here. Well, we had our swing low here, a marginal higher low here, right? Then we displace, come back, right? What would we be putting in here? Well, it would be then the third daily higher low. So that would be the most bullish situation or scenario. And then we can potentially look to come back up, retest that 60, and potentially break over and come back into 61,000 on ES. So that's another way, of course, you can look at it. But, you've also got to realize here, overall, you can turn this into a bigger balance too. I mean, we're trading in a range There's no particular trend going on right now other than these smaller type of trends that we're looking at. Yes, obviously, I mean, a little bit of a daily downtrend being formed here, but and we can make a weak argument or loose argument for a daily one, a new daily one trying to be created. But we just have to keep in mind the bigger context is still, I mean, it's obviously tradable, but, it's still this range overall. With that being said, I think everybody and their mother obviously is talking about it and seeing right shoulder, head, potential head and shoulders, sure. We got a right shoulder, head, right. Certainly possible, but it really doesn't mean anything. Here's our neckline. This is what's got to break. So I'm not really concerned about it until I see a neckline break and acceptance. So it doesn't really mean anything too much to me at the moment. With that being said, we are still below the daily 9, 20, and 50 period moving average here, but we are still over the 200 EMA and the 180 EMA, which is sitting quite lower. The other thing I wanted to bring up is just some of these shorter trends here that we are in currently. Okay, I got this channel here that we have been trading in, coming up to back test right here. So we very well could see just a rejection from here and come back down. Of course, we'd be targeting back down towards 59.17. It's very possible. And then if they take that out, looking obviously to match those lows down in the 58.70s and 60s. So I was just doing some charting, and I noticed this channel and this potential trend line here that we are coming up into. And of course, with such a strong move up, we often talk about this strong move down creating weak structure, makes it easy to move up. Same thing. Once again, it's got to be a full candle down, something like this as well, rather than like 1, 2, 3. This is a little bit more healthy, but they're still pretty big daily candles. This easily can retrace 50% down in here, and we can take a look maybe on the daily, on the smaller time frames, and look at the volume profile, see if there are any pockets there, any lower volume nodes or anything that would indicate some weaker structure, and see what we've got. Now, another thing that we can talk about that we often do when we have kind of these larger candles here, I mean, we definitely made a nice move from 5,900, right? What were we up? Almost 75, almost. I mean, did we tap 6,000? Almost. The high was 59.96. So almost there. But is it crazy to think or impossible to think that we couldn't retrace some of it? Well, let's just go by, again, our 25 and 50% candle range theory there. If we're holding 25% of the range from Friday's session, right, kind of work out a flat. Whoop, that's an ugly one. Work out a flag there, right? Or 50%, and we can go from that opening price here from the 2nd of January is pretty much 50%, maybe a little bit higher. Maybe actually the open from the 31st is about 50%. So keep an eye on that 59.50. I think that, and that's about that 50% retracement. And if that fails, and we were talking about that 59.50 in our other chart here before I had deleted it, and I'm just going to mark it off because that's our 50%. And if that fails, then it would be likely that we would come back down and retest the lows from the 31st and the 30th of October. That would give away, pretty much for me, the hope for the bulls in the short term, because then it would be more likely, right? We consolidate here underneath, and then we've just got that opposite situation as a type of a bear flag consolidation taking place, and then looking to go ahead and target these lows once again. Really would need to get back under 58.95, and then we can go ahead and see about that. But I think that 59.50 is kind of a good pivot. Well, 59.55, 59.50, there was pretty much the open. So keep an eye on that for the 25 and 50% retracement on ES. All right, I think that's everything I wanted to go over for ES. Let's go and get through some day trading levels here and see what we can take away on an hourly chart. Just lets me zoom in. Whoop. Come on, baby. There we go. I knew that was going to happen. All right, you can really see just overall here the range that we're just kind of stuck in. And let's go over some levels from the day trading perspective. Now, we we definitely closed at a really precarious spot overall. As you can see here, had 1, 2, 3 rejections here. Big flip here as well. Right, so multiple points here. We've hit 4 times in this general area. Pretty much you can say that that figure, the 6,000s, the cap, anything over that we're going to need to see for further continuation, in my opinion. Otherwise, can still be a little bit of an issue for the bulls. But we talked about that daily level at the 59.50, 55. Also got a little bit of a smaller level here. Just take a look at the hourly lows from back on Monday, at Thursday from a week ago or 2 weeks ago at 3 o'clock. 59.65 area is what I would want to see the bulls hold overall. And that could just put in an hourly higher low. Excuse me, lower, higher low. And that can give us a springboard. So do I want to be going long right here? No, not really. You know, from this perspective, I'd be much rather more inclined to see a pullback like this, and then we come up and pull and see if we can get that trade up and over the figure there. Watch the highs here. You can see a little bit of a balance zone, hourly balance right here. You could also, and it's pretty much where we stopped, 59.80. Okay, I don't have it marked off because it's not within my system for this, but that's worth noting, right? And all these areas, and I'm kind of tempted, honestly, to mark it off because I just would like to know that. I think failing those balance highs would be, what I'm gonna do is make it different looking. There we go. So under 59.80, look for a little bit of a deeper pull in. 59.70, 59.68 for potential long area. Sorry. Breaking underneath 59.65. Look for that 59.55 area And that's going to take us pretty much right down here, 50, 46 into that zone. That's going to be the make or break. I'll give it a little bit of wiggle room here on the intraday. It could come down just a little bit lower, 59, 40, 36. Anything under that definitely would have more of a bearish type of perspective, because this would be taking out, we're no longer making higher lows at that point if we're starting to see price trade and accept down in this area. Right at that point, I'd be looking for moves like this down into 59.20, 59.10 again. So under 59.46, under 59.50, a little bit more bearish coming down. I think under 59.70, 65, that's going to be your warning that we could see that downside, right? So it's either going to be like this. Oh, and then if we break, warning, this would be likely first target. Then if we break, obviously we're going to go ahead and see if can't get more fills down there in the 36s, the mid 30s, and if that breaks, 20s, 10s, right down like that, right? Most bullish scenario, hang out up here, and then we finally break out and above and start to come back out. We'll look to this breakdown here from Monday morning. Very possible 60-13, 60-15, and then seeing about potentially coming up into 60-30, 60-28 area, kind of up in this area here. So we've got our bull case here. We already went over our bear case here, and that's what you got. So, all right, let's move on to NQ. Plus, we got the Steelers and the Bengals playing soon, so I'm going to watch that. And let's go into... Boom. Clean slate. Goodbye. All right. I will say this though before I move on to into NQ. The RSP does not look good. And this is kind of, Nvidia was up, I believe 6% at one point on a nice bounce. The RSP here is, although it pushed up, it does not look like ES or SPY. It's still showing me that breadth under the hood, besides a couple of the big cap names, is really not there yet. It's going to have a lot of work to do. So this is just something, the equal weighted S&P 500. This is a good signal just to say, okay, we still want to show a little bit of caution overall. And we'll probably see that reflected when we look at some of our internals a bit later. All right, so NQ here, very similar situation, but on NQ we actually did kind of pretty much match the lows. Yeah, flat lows there, equal right into the high from July perfectly. And that's going to be our point, right? That's what we're going to pay attention to. If these get taken out, I mean, I can still bring us down. And this is a 400-point range of supply. But structurally speaking, and of course we're dealing with the higher time frames here, so it's going to be wider ranges. But structurally speaking, there's no real true breakdown unless we start seeing, right, this area get taken out, right? And you can see right here, this was balance for a few weeks, and then boom, we broke the structure, came back, retested. Next week it came back up and gave us the markup. So really, unless 20,600 we see some weekly acceptance, there's no real cause for concern for me. Of course, there's downside trades to be had intraday and, week to week basis, but nothing that's saying, okay, we should be overly cautious from the weekly perspective. That being said, still monitoring the overbought conditions here, just the same as we are starting to curl down. This one isn't curling quite as steeply as ES was, but I think that's because of NVIDIA. Okay, similar situation, just on our weekly candle. Tried to push down, kind of a hammer here, bought back up, and then rallied back up. Here we closed right around basically 21,500. Which I think is good because we closed above the lows from the week of the 23rd. And I think that that's encouraging. Weekly still all over the 9, 20, and 50. I don't think, let me just go back to ES because I didn't even look on the weekly. Yeah, those are all still over there. Weekly moving averages as well, so no really issue there. Let's get into the daily and get a couple more levels up on our charts for the first real video of 2025. Okay, not quite, and I didn't look at this in the ES, but I'm sure it's the same. Oh, let's just flip over just because I want to, actually I didn't notice it. Almost overbought. Oversold, but not quite there yet on ES. And what's actually interesting is that we don't have a positive divergence. We have a negative divergence right now. This didn't even turn green. It's still red. Oh, that's interesting. You would think that would have turned green. This would have turned green and started to curl up, and I'm not seeing it. So negative divergence there. That's interesting, especially because we're coming into that trend line I was looking at earlier. I wonder if we get a nice little sell on Monday. It still probably will be a range day, but I'm wondering if we pull back. It'll be interesting to see what Globex opens up at, and if it's up a little bit and then we open up, or coming into the open up, that might be a sell into the open for me. Okay. All right. So, what do the bulls need to see? Well, you can see these matching highs from back in July and from 11/11. Early balance right here. So I am going to mark off. Ooh. Let's get into this high here. And we'll come down a little bit lower. All right. So pretty much coming right into a closing, right into supply area. Could be a little bit lower, to be honest. All right, so still a bit vulnerable to me unless we really see acceptance over 650. It's another 175 points or something. I'm bad at math, but you can figure that out on your own. I got to see some closes this week over 500, basically. 450, 500 would be the most ideal thing. Closing in this area here, and even better if we closed over 650. That would make me think that we could go ahead and make another attempt, another run at the highs from the end of January up here in the 22,100 area. Of course, we've got 22,000 figure that we've got to watch as well, but that's what I would be watching for. And let's see if we got any other. I'm going to throw in the low from the 26th. All right, so let's see some closes over 21,450. Then we can look up into the 600s, 650. Over 650, we'll look for 700, of course, and potentially about 850 there, abouts. And really, watching the high from the 20th, I think is fair as well if I was looking for a short. You know, kind of from 800, 21,800 to 860, a swing short could potentially work in that area. But still vulnerable, still underneath the daily 9, sitting at 21,533. Pretty much was the high, more or less, from Friday. I think we stopped around the 50 area. Yeah, we got it up to 560. So pretty much in that zone. But if we come up into that 650, again, we could still just see sellers. And we were talking about, you know, we've got our swing high, lower high. This is pretty much even, right? But we were matching the highs from the 31st, more or less the 2nd. You know, we can see this is almost, you know, pretty much starting to turn into a 3-day balance so far. Let's see if we get another one. So we could even stay trapped and balance out a little bit more. Very possible as well. You can also do that 30%, 25, 50% retracement. And what we can do, balanced here for, this was, let me get it right. 1, 2, 3, 4, 5, then break a structure. 50% if this candle pretty much is these highs. Oh, it's a little bit lower. Those are a little bit too low. But certainly under 400, back under 400 would say to me that shorts can still potentially work. But holding 450, and it doesn't really seem to me that they would be in play in the immediate future. And I would look for a sell opportunity up a bit higher. from a swing perspective, of course, because we're looking at a daily chart. So we'll see what this kind of zone here does. Do we consolidate within this range and then we make a move to the 650, or do we fail back under and then collapse underneath? Now that's obviously going to be the question. And let's just mark it off where this broke down here. Coming in from this point of pain high from the 15th. 21,280. All right. So let's see if we start to see acceptance underneath the 450, then I will look to come back down into the 200s, the high 200s. Maybe we just get into 315, something like that, 320, stop there. It's very possible up in this area. Right, so if this rejects, look for this. Could get a bounce there, for sure. But certainly anything underneath 21,280, well then watch for the lows from the opening, the lows from the 3rd. And then if we get under that, we're going back down to 21,000. In my opinion. All right, let's look over some day trading levels, which we got. Okay, so from this view, want to hold 450, 460, pretty much right where we stopped. If we can consolidate like so, that would call that bullish consolidation. Look, see if we can break up and over, come back up into 700, 730, or we break under, and then we'll look to trade back down into about 350, the 11 o'clock high here, right before we kind of had that big sell-off. I think this was Thursday. Yeah, this was on Thursday, yeah. So that's when they retraced the whole move, right? It was just like running, and boom, and then poof. So that's what I'd be looking for. If we lose 21,350, watch to trade back into 21,275. Just a slight hourly balance here. Could trade back into that. But under under 250, 21,250, bring it down another 50 points to 200. Under 200, look out below. We're heading back down to the low 200s, to maybe 20,000, 60, 65. Under that, we're looking for that 21K again. So pretty straightforward. If you're looking for the bigger move, it's either going to be you wait to find acceptance up and over, or this under 350. But that's for the bigger move. You can certainly trade. I mean, you know, there's trades to be had if we just stay up in this area, of course. 465. I mean, that's what, about 100 points, 80 points. Not bad. And it's pretty much about the same in either direction. Right. So you can maybe use that 21, 460 as some type of a pivot, whether or not you want to try and come back down into the 340s, 350s, or trade up and stay above and trade up into back into the 21.5 550s, 570s. And that's going to be the big break, right? If we can get over that. You can see how many times that we've kind of reacted in this area before. Right? So, all right. Let's move right along here and take a look at some of our other charts. Let's start off with the VIX. Okay, VIX is... All right, still holding up. Can see, obviously, after we had that huge spike, came back down, faded back, but broke under 14, but then came back, recaptured over that 15. We're really using, as we mentioned, 15 to about 1575 as our pivots for our volatility gauge. For me, definitely over 1575 is really what tells me that, you know, volatility is here to stay. And although we did pull back a little bit, did not really find a close underneath. So for me, we can just still see higher volatility, which, you know, I encourage. Up in 20 and 18 gets a little bit wild for me, I guess. Maybe I'm getting old. But I don't mind it here in the 15s and the 16s, 17s. That being said, we could just consolidate and trade between 16 and 19 and 20, as you can pretty much see right here, as we've been doing. So expect volatility here to stay raised, unless we really see under 15 is going to be the bottom line for me. But under 1575 would be a good pivot there. As far as the put-call ratio, God, we're really off sides in Christmas here, giving us a bit of a short signal saying, okay, what do you want to do? We got way off sides in the 33, and that gave us that big pushback. Let me just something. What was the low for this? This was on the 24th. Oh, pretty close. So we hit 89 at the high on the 17th. That's when we collapsed. Just wanted to look at that. But nothing now, back in the normal ranges. Let's look at the yield here, yield curve. All right, flattening out, but still steepening. VIX 1 day kind of leveling off. Let's look at how many stocks in the S&P are trading over their 50-period moving average. All right, got pretty extreme here, right? We were down at 15%. That's really what gave us that snapback. You can see here, back all the way at the end of March, hit that level again. So that's to be expected. The counter trend rally that we saw from the daily, but still way below 50%, telling me breadth is still in the dumps. Can't even get over 30% yet. Still no good there. Could still see a little bit more upside here. Let's see what happens if this comes back up into the 30s, 20s. Maybe we come down, but it's pretty extreme down here. You can see on our overbought, oversold. I mean, that was just saying, okay, watch for some type of a rubber band coming up. how many stocks are trading in their 200, over their 200, still above 50%. So no major quote unquote warning signs there from that perspective, and a little bit of a bounce as well. New highs versus new lows are another breadth indicator. Okay, still not above the zero line, but making a good old try. Very possible that this just wants to end up rolling over like so. So watch out for that. But if it starts to get over the zero line, that's our pivot, so that would be good. I was looking at this last week or earlier, midweek. Noticed the junk bonds kind of forming that uptrend way before the market did. And kind of gave me a little bit of clue that we were going to see a little bit of that snapback here. And also here, as you can see in our higher time frames on our trend lines on S&P 500, just the SPY ETF, right off this major macro trend line. Same spot, the highs from July. Boink. All right, I'm going to turn this into a little channel now. Let's see if this starts to fall off, but that's good. Coming down a little bit. We got a little pullback at the end of the day. But nothing really contrarian there. Okay, let's take a look at what's going on in the bond world. Going still, downtrend channel. Yields here going up. That's our ratio from the TLT, the 30-year, 20 to 30, and the 7. Above the 50. Nothing really says that this is going to pull back. Bonds, though, not looking bad. Starting to definitely overbought. Let's see. I mean, everything's going to depend whether or not they can get back over 88.40. But I could see TLT making that move back up. Whether it gets rejected there, I don't know. But some type of a bounce on the bonds, I think, is coming up, probably. And that means yields probably will cool just a little bit. You can see TLT really hasn't been able to make a new low. Made a new low, but it's still downtrending here. But more or less, it's kind of flatlining, so it might be basing out. You can see this from the lows from back in April as well in this area. And starting to get a positive divergence here with this. This is what I want to see from ES. This is exactly when I was looking at ES overbought. This is what I wanted to really be seeing, where we had I was talking about that negative divergence on ES and NQ. It didn't look like this, right? And I'm surprised at that. I'd say that's not a good sign. But in this case, this is a positive divergence. This is down, this is up. So a watch for bonds to potentially make a move. $1, $1.50 higher. That could be in the works. But if we see closes over 88.45, then we'll look for a little bit higher, back up into 90. Let's look at the Dow. What's it doing? The Dow. Hanging out here. Came back into this balance. Couldn't really break underneath. Holding. But they're in step, so no divergences here. And the transports bouncing off daily volume point of control, as well as the 200 SMA. moving up, positive divergence. It's looking pretty good. I think they could probably, we probably could see another 150 points to the upside on transports. Value area highs. That would make sense. 16,155. Looking good there, but everything's in lockstep, so no major divergences. That's saying anything to me. The dollar has just been on an absolute tear. Starting to cool down. You can see how many 4-hour candles we put in to the downside. It was up, even though it was even though this candle closed red, it still was up another 65 cents on the Friday session. I personally think we're more likely to come back and retest 108.50 area. And then maybe from there we head up higher once again. But look for the dollar to cool off a little bit. Yields here, talking about a bounce potentially in the bond market. Kind of stalling here by this 4.6, this 46.3 on the TNX. It's got to get over that for continuation. But now here we've got a bearish divergence. This coming down, this coming up. This kind of tells me again that I think bonds are going to bounce a little bit soon. Again, I don't know how much, but it seems likely that they would bounce and that this during this week is probably going to head down. But as long as it holds over 48, 44, 80, 45, it still can just bounce and go ahead right back up. But a little bit of relief here definitely could be in the works. I could see that happening as well. And I think that's it. So I don't really have any super bear warning, red flag, bear signs, except for that breadth is still pretty crappy overall in the market. We saw that in the how many stocks of the SPX AR 50 and 200. And we saw that in the new highs versus new lows. Other than that, I didn't really see too much that's giving me a warning sign. Let's just take a look at the VIX futures. I still think they're in contango. Yep. And VVIX is looking like it's under 100. Yep. So that's good. VVIX is kind of looking like it's sort of rolling a little bit here. Maybe a little inverted cup and handle. I would say that's a good sign. This is telling me possibly we could see a little bit more upside here in the market as far as that counter trend rally. All right. Very interesting. Actually, I wanted to take a look. Oh, we did have it. Keep an eye on the amount of difference here between these different VIX futures contracts. The spread between them gets tighter and tighter. We might go into backwardation soon on the VIX futures. And that could mean more volatility coming up in the next 2 to 3 months. You can see this is about 75 cents. And then we go down to 15 cents, 15 cents. The gap between the contracts gets a lot smaller. And if that happens, it's going to bring this down. And that means more potential risk in the market. If it's in contango, their risk managers are good. If it gets in backwardation, it's not good. So that's what I got there. All right. That's everything I wanted to go over. I hope everybody's having a great weekend and continues to have a good rest of your weekend. Again, thank you so much for everyone that's subscribed to the channel. It really means a lot to me. If you haven't already subscribed, help me get over that 2,000 marker. Come on, you know you want to. Really means a lot to me. I do this for you guys and you guys alone. So any little bit of support really is a motivator for me, and I appreciate each and every single one of you. Remember what we say at the end of every video, and our mantra here for 2025: a prepared trader is a profitable trader. And so trade your plan and plan those trades. I'm wishing everybody again a killer 2025 and a great week ahead, even though it's going to be a short one. Get a little time away from the markets again, which is always nice. And that's it. So take care, everybody, and I wish you the best. See you out there.